Hello, everyone, and welcome to another edition of Swim with Jim. This is Jim Ludwig from Main Street Financial Planning. We're glad to have you with us this morning. And our theme this month is love and the things that people do in personal financial planning for love. And one of those things is buying long-term care insurance because we don't want our kids to be burdened, or buying long-term care insurance or making other plans for our elderly parents so they can live independently. And with us today is Beata Everett from Long-Term Planning Associates to explain all these intricacies and questions we need answered. Good morning, Beata.
Good morning, Jim. How are you?
I'm doing just fine, and we're glad to have you here. Let's get right into it with our first question. Is what is long-term care and what is long-term care insurance? Because we want to make sure everybody understands the basics.
Sure. So long-term care really can be either custodial care or it can be skilled nursing. Majority of the time when we're dealing with long-term care services, we're really dealing with custodial care, which basically means it's generally a home care aide. It can be a CMA, an HHA, but it's basically the person who's there to make sure that if the person has dementia or Alzheimer's, that they're in their home safely. If they need help with their activities of daily living, such as eating, dressing, bathing, moving around the house, that person is there to make sure that they're safe and that they can continue to live really their life the way that they were able to prior to having any type of illness or disability. I do want to point out that a lot of people get disability insurance and long-term care insurance confused. Basically, the easiest way is disability insurance replaces income versus long-term care insurance actually pays for the services that the person otherwise would be paying out of pocket for. And when they have long-term care insurance, they can decide whether they want the care to be in a nursing home, assisted living facility, home care, or adult daycare services. So they have a lot more flexibility with their options at that point.
Well, you used a couple of acronyms, CMA and some other things. Could you explain what those were in case our viewers don't recognize those acronyms?
Sure. So a CMA is a certified nurse's aide and an HHA is a home health care aide. So depending what type of certification the aide basically has, really, that's really all it comes down to. With most of the plans sold today, the insurance companies will really accept anybody as long as they have some type of a certification to basically show that they did some type of a coursework to be able to help the person. Although if the person actually works for a home care agency, then the insurance companies are actually much more lenient on the type of certification that they would need to have, because they then have the assumption that the agency is providing them with some type of training.
Are there any provisions for family members being compensated these days?
Not on the traditional long-term care insurance side. I know that there are actually starting to be a few policies that are more of the life insurance with the long-term care riders, that they actually will allow a family member to provide care. So they are starting to come out with that, but not on the traditional long-term care insurance side, but at least with some of the hybrid or life insurance with long-term care options. It is potentially there now, and I think it probably will increase in the future because of the fact that caregivers, so often the family members are the caregivers. So I think they also just need to, when they do that, they need to balance out making sure that there's not going to be fraud happening, which I think is really their biggest concern right now with the way that things are set up.
So these benefits are provided by life insurance companies, and it's a contract, but aren't more and more life insurance companies getting out of the long-term care insurance business?
Yes and no. So it's interesting. We've definitely seen a decrease in the amount of companies that are providing traditional long-term care insurance. And at the same time, while we've seen a decrease in that, we've actually seen an increase in the amount of the other options that are available. So there's actually more companies that are providing the life insurance joint with the long-term care. And there's also some companies that are starting to offer annuities with long-term care. Right now, those have not been very popular, and a lot of states still haven't approved the annuities, those products, but there are a really high amount of different options for people who will do the life insurance with the long-term care. And those are even broken down into just plain life insurance with a long-term care rider, which basically means that the long-term care, that benefit usually won't have an inflation feature on it. While there's also hybrid options, which really combine the life insurance and long-term care and provide an inflation feature on the long-term care, so the person can have really great benefits in the long term and be able to still have some of the benefits of the life insurance. So even though we've seen a decrease in one area, we've seen an increase in another.
Well, now, most of these benefits are sold by insurance agents, right? And how do you know you're getting the best deal when they represent one company or just a few companies? How can a consumer who loves their kids or loves their parents know they're talking to someone who's going to give them advice that's in their best interest?
So that is a hard one to answer, to be honest. I can tell you that I've been doing long-term care insurance for 14 years now, and I have seen a lot of agents that start to do long-term care insurance and then they leave. And sometimes they just decide that it's not really what they thought it would be. And we've had a lot of people who will call us and say, I bought long-term care insurance a long time ago, and the person either left or they also sell a variety of different insurances and they don't really know how to help me now. So for our firm, basically all we do is long-term care insurance. When somebody comes to us, we do also show them the hybrid options. We do show the life insurance with the long-term care, but we don't really do pure life insurance or pure annuities. It has to be in relation to long-term care. So we do really tell people, make sure you find somebody who, it's not, long-term care shouldn't be one of the 10 other things that they do. And they really should be able to then also tell you, what is it that they do for you in the long term? What happens when there's a rate increase? Or if you need to go on claim, how do they actually service you at that time? Because long-term care insurance is not the type of insurance that, you buy now and 3 years later you switch to something else. It's really an insurance that people tend to keep for, 10, 20, 30 plus years. So it has to be the insurance company that they're comfortable with, as well as the agent. So it's somebody that can help them in the long run. And I mean, there are, still a lot of different insurance companies. They all have different ratings. And so even with the insurance company side, we make sure we look at, what it is that the person, what they're looking for in the plan, make sure that those specific details are the correct ones, but also make sure we're working with strong companies so the companies are there in the long term.
Well, there has been a lot of discussion over the last number of years about insurance companies raising their rates on people who have long-term care insurance. What's going on there?
So the rate increases are basically something that and historically we've always told our clients, if you're buying a long-term care policy, a traditional policy, expect that there will be rate increases. We do feel that the policies that are being sold today really should have less frequent increases, and the increases should be on a smaller scale compared to the old policies. Basically, the insurance companies have a lot more data right now than they used to when they're pricing their policies, which is why we've also seen in most states, most of the traditional long-term care insurance will have gender rates. And when they came out with the gender rates, female pricing went up anywhere between 30 to 80% on average. So they basically realized that females are going on claim much more frequently and they stay on claim for a much longer period of time. So they're using their data to the benefit in terms of the pricing is definitely much higher today than it was 5, 10, 15 years ago, but that also helps to decrease the chance of the rate increases. Last year, we received a huge amount of increases basically for our clients, and it was across the board. It was not just one insurance company. We received them from Genworth, Prudential, MetLife, John Hancock. It really was across the board. And a lot of it was the fact that these insurance companies, when they priced out the products, they just did not accurately do the rates for how many people are actually using these policies and how long they're on claim. And the worst ones are really the ones that have the unlimited benefit periods that are no longer available to purchase today. Those people really end up getting hit with the hardest rate increases, and the ones who have the 5% compound inflation, because of the fact that those are the highest risk pools for the insurance companies. And to be honest, that's also one of the reasons why the hybrid products and the life insurance with the long-term care has become a little bit more popular, is because those rates are guaranteed. So not only does the person get a death benefit if they don't end up needing long-term care, but the rates are guaranteed. So for people who are really worried about what's going to happen with my premium 10 or 20, 30 years down the line, those products at least provide them that security.
In the time we have left, the big issue that as financial planners we deal with all the time is the clients get a rate increase, usually dramatic, and they call us and say, what should I do? What kind of answers are you giving those kinds of clients?
Sure. So we do tell them that the first thing we tell them is that we understand they're frustrated because nobody likes to have a rate increase. And we have seen increases that really range from 10% up to, I believe it was in New York, we had a client that received a 110% increase. So we have seen pretty much everything across the board. What we tell people is, first off, don't cancel the plan right away. There are a few times that people will cancel, but there are options in between there. There are times that the policy will have what's called a non-forfeiture rider or a contingent non-forfeiture rider, which basically means that if they have a certain high level of a rate increase, they basically could keep the policy, and if they cancel, they would have a paid up plan that's worth whatever they paid into it, the policy. They can also lower their benefits. The insurance company typically will mail out some of the options available, but if you call them and you say, I don't really like these, let's talk about other ones, they can get you other options. If the person has an agent, the agent would be able to also request those options for them. When we have somebody that is looking to lower their benefits, we go through a lot of different really aspects of their policies and their life. We talk about what does the cost of care look like where they are today versus what it looks like where they think they will retire and potentially where they will need care. If they're in Connecticut or New York versus eventually they want to be in Alabama or Florida, the cost of care is drastically different. So we look at that. We look at what their support system looks like, what their retirement income is going to look like. So it really comes down to a lot of different variables. So having an advisor, whether it's their financial planner or their long-term care insurance agent, having an advisor that really can look at the full picture can really be helpful, because there really are a lot of options that the person should be able to have to lower to bring the premium down to a more comfortable level. And the way we look at it is that some type of benefit is always going to be better than none. So we always say, really, the last resort is canceling. Really, let's look at the options of what they can do to help bring that premium down to a level that they're comfortable with, because they're really, even the person, for example, that had the 110% increase, even with that one, we're able to really bring it down because of the fact that that policy was insanely cheap in reality compared to what they would be buying today. So really work with the advisor to help them. The advisor should really be helping the client, I should say, to help focus on what they need and what the premium will be that can be comfortable for them, and how to basically get there even after the increase. And
your firm is both the agents and you also have an advice giving portion of your firm, correct?
Correct. So we have two sister companies. One is really focused on the education and sales of long-term care insurance. And then we also have a sister company that basically does fee-based consulting for people who purchased insurance from another agent, and they basically want our services now because either the agent just left the field or they simply can't, for whatever reason, aren't able to provide their client with what they need.
Well, you know that people like me like hourly advice. So I just put your email address underneath you. So if somebody wants to contact your firm and they already have a policy and they have questions that are beyond our expertise, and believe me, we're not insurance agents on a day-to-day basis, and we don't have contacts with all those companies, uh, they'll be able to contact you directly.
Perfect. I greatly appreciate that.
Well, we've been talking to Beata Everett today from Long-Term Planning Associates, and they're a nationwide firm, and we've used their services in the past, and we wanted to bring it to your attention that this is a very complicated area and something that people need to focus on if they love their kids and don't want to be a burden, or if they want to help their parents out and have them live independently for as long as possible. Thank you very much for helping us.
Thank you. I appreciate your time.
And everybody, you have a good day. Thank you. This is Jim Ludwig, and you've been participating in Swim with Jim.